Welcome back to Ensuring Success 2022, Day 2. Thank you so much for spending your time with us, and we hope you're enjoying the event. This session is going to be on surviving a sales tax audit. We're super excited about that. First of all, though, I'd like to give you a little bit of housekeeping information, and I'll introduce myself. I'm Gail Perry, Editor-in-Chief of CPA Practice Advisor Magazine, and I would like to take a moment to thank our sponsors who are making this event possible, and they include ADP, Avalara, BotKeeper, Corpay One, CPA.com, Canopy, Caseware, Field Guide, eFile for Biz, Intuit, Right Networks, SafeSend, Sage, SureLink, TaxFile, TechGuru, Xero, and Zoho. Without those sponsors, we would not be here, so we are very grateful to all of them. In particular, we're very grateful to Avalara, who is sponsoring this particular session, which is why you see a lot of orange right now. For those of you who are just joining us, I'd like to explain how CPE works for this session and for all our sessions. During the session, we will present on the bottom of the screen 3 different times a code, a 3-digit code that you need to record. Excuse me, you need to record, and when we present that code, you will hear this sound to remind you to make note of that code. So it'll happen 3 times during the session. At the end of the day, at the end of the week, at the end of the month, whenever you decide you want to collect your CPE certificates, you can return to the Ensuring Success site, click on Get CPE Credit at the top of the screen, and you will be asked to enter the codes for each session you attended. Then click a Go button for each session and a Go and what is it? Okay, I think there's download. There are 2 buttons. When you click the second button, your certificates will download automatically. Okay. Also, we are on social media. Please feel free to chat about us on social. Our hashtag is DecemberCPE. And last point I want to make is under the screen where you're looking right now, where you see us, there is a Ask a Question box. During the session, feel free to enter any questions you would like to ask of our participants on this panel. If you're having any tech difficulties, you can enter that as well in the Ask a Question box. Or if you just want to share some of your experiences that relate to what we're talking about, we would love to hear that as well. So right now, we are going to head over to our session, which is Surviving a Sales Tax Audit, and I'm going to introduce our panel, which includes Colleen Duczynski, Sona Akmakjian, Mark Koziel, and my co-moderator, Alexandra DeFelice, and I'll have each of them introduce themselves.
I'm Colleen Duczynski. I work for the Texas Comptroller's Office. I'm a regional manager there, and I've been there for about 20 years.
Hi, my name is Sona Akmakjian. I am a senior director responsible for global accounting partnerships at Avalara. I've been in the profession for 30 years, worked with accounting firms, but also was an auditor with the state of California early on in my career.
Hi, I'm Mark Koziel, President and CEO of Lineal Global. We are an international firm association with 250 firms globally. And I am here partially because we are strategic partners with Avalara on behalf of our member firms who utilize Avalara's services regularly.
And I'm Alexandra DeFelice, Director of Marketing and Business Development for Payne & Fears Law Firm in Southern California, co-moderating with Gail Perry this last 2 days, designated bell ringer, and I'm fielding the questions from the audience.
All right, so we'd like to get into this subject and talk a little bit first about has there been an increase in sales tax audits, and if so, why? Colleen, do you want to start us off?
Oh, an increase. Not really sure if we've had an increase. I think we're typically doing our normal. We have had lost staff, so I know for Texas at least, we've probably decreased our audits based on the availability of audit staff.
Okay.
But I do think that one change is the type of audits. You know, we're 4 years into the Wayfair ruling, so a lot of clients out there are starting to see audits coming in with this new regulation in place in 4 years. So from that perspective, I think there's increased activity. I don't know about staff, but IRS is certainly adding more budget, billions of dollars to better enforsing and adding more staff to audits.
Yeah,
I don't know if that's
trying.
trickled
Yeah,
to
we're
the
certainly
state.
trying to. We're looking to add, and we've constantly are trying to hire. But yes, we are starting the auditing of Wayfair with our first date for reporting for marketplace providers was October 2019. So now is about the 3-year period where we are going out. We do have a group that does identify taxpayers, and that group also works with taxpayers who want to file for voluntary disclosure agreements. Mm-hmm. So they work a lot on marketplace and remote sellers and Wayfair particularly.
Which is a very hot area, not just for Texas, but across the board.
Yes.
Marketplace facilitator rules are so complicated and so fluid and so dynamic, changing, that it's a big area of focus from a technology perspective for us as well. And at this point, every state has a marketplace facilitator rules, which really moves the reporting responsibility from the end seller to the marketplace platform.
So what kind of things can cause a company to be subject to a sales tax audit?
In our case, there's a couple different ways that happens. We do have taxpayers that are so large that they will be audited regularly. We also have audits where if they were previously audited, they will be generated because of the materiality of their audit. But we do search for taxpayers and audits. I mean, that's typical for the state. Obviously, we're auditing for compliance, and we want to get taxpayers reporting correctly in the future. So that is something that we do look for. A lot of it has to do with how well they're reporting. So I'd say the best is to report properly and timely. Local taxes is a big area also that we do look at, because we do have states and cities that depend on that revenue. And we get constant calls from those cities to make sure that they're getting their revenue because they depend on it. So we do look at that a lot as well.
And that's kind of consistent with what I've seen. It's really the size of the company, it's audit history, it's sometimes the industry, and sometimes people call into the state and say, hey, so-and-so is not registered or is over collecting taxes. Sometimes there's a compelling event that drives the audit selection as well.
Oh yeah, especially the calling in. We'll get letters randomly. We receive calls. Even people that work for the state, they go out and shop or go somewhere, and because it's our jobs, our day to day, they'll take notice and bring that in and say, hey, I don't think this tax is right, and we go out and
there's sales tax whistleblowers out there.
Yeah. Oh yeah.
That's more than you think.
I did not know that was even a thing.
Yeah, even some disgruntled employees sometimes will call. It's quite interesting. We get some of those. So.
Okay.
But we investigate, and obviously we want to educate, so that's a big focus for our audit staff is taxpayer service and making sure that you understand for future compliance. That's what we want to do.
And are there still random audits, or is there not even time to do that? Because you've got the real
not
audits.
so much, yeah. I mean, occasionally we do, sometimes it's a new taxpayer that just starts reporting. Sometimes we do identify them, and we will generate that audit just to get them off on the right path early on.
Okay, or just to let them know you're there.
Right.
Watching.
Yep, that's true too. Yeah.
And don't you think because of Wayfair, like the random audits are kind of going away because there's so much increase in the number of audits just based on where Wayfair is, and even in the bigger companies, are audits taking more time now because of the?
And the pandemic certainly affected our audit cycles a lot. Taxpayers' availability, things like that, it delayed our cycles, and they definitely took longer. But it seems to be shortening a little bit now. But we're having trouble getting out in the field. There's a lot of taxpayers that are working remotely or consultants, and that does make our audits go longer as well. We try to encourage at least a first meeting, with the taxpayer, with the consultant, to try to get that first meeting off well, so that the rest of the audit can continue on.
But what I've seen is over the years, states have gotten smarter about how they audit. They're more technologically savvy. They're more efficient in their audits. I've also seen a lot of sharing of data across different taxing authorities within a jurisdiction or across jurisdictions. So I think overall they've been more efficient, but I see the remote workforce complicating things a little bit for auditors.
And that's even on the state side, and this is where we're seeing an increase. And we talk constantly with our member firms that SALT in general, right? So it's state and local tax. It's not sales tax, it's state and local tax that sales tax falls under. And because of that, with all the remote employment that's happening now, that's been a bigger trigger for some of the states. And then they go in, and that's where they're finding some of the sales tax related issues too in other states that are looking at both.
So should a company assume that sooner or later an audit is inevitable? Or are there companies that just are always under the radar?
Definitely size of the taxpayer. They're pretty much always on the radar because they what we call auto generate, so they always come up. That doesn't mean that we have to audit them. We do cancel some or decide to skip, but yeah, it definitely can change. But no, I wouldn't say they're out of the millions of taxpayers that file. We audit a very small percentage, like less than 1% of taxpayers are audited, in Texas at least.
Are e-commerce companies becoming more likely to be audited, or are there more e-commerce companies being audited in your, what percentage of your audits are for e-commerce companies?
I think it's pretty minor. Typically, we audit taxpayers that have physical presence in the state, and because the timing right now, our e-commerce our 3 years is about now where we start auditing. So we're just about to start that e-commerce audits, and a lot of that will have to do with reporting. I think more what would probably get audited is if they're not filing, they're probably going to be identified and notified that we believe we have economic nexus and you should be filing.
Okay.
I think, Colleen, when we were prepping for this session a little bit, you were talking about like companies that were like selling on Etsy and things like that. And can you talk about that a little bit more, because that gets into a different realm than if you're just selling on your own website or something, right?
Right. If so, we have marketplace providers like you said, Etsy, Amazon, Walmart. They're what we call marketplace providers, and so what they'll do is they will file on your behalf. So they will collect the tax for your sales, and then they will report those sales. And that's what when they register as a marketplace provider and indicate that that's what they're going to do, and they'll be responsible for it. So we also have what we call remote sellers. So those are people that on their own website, they don't go through a marketplace provider, and those taxpayers will be able to register and file for what we call a remote seller rate. So it makes it easier for those sellers to not have to deal with all the local jurisdictions, which that can be very cumbersome. So we have it's a 8% rate. So it's a 6.25% sales tax rate and a 1.75 local tax. So they don't have to file all the local allocations. And so that makes it a little less burdensome, I'd say, for the smaller taxpayers. We also have a safe harbor for those smaller taxpayers. So it's a $500,000 revenue over a 12-month period. So if they're under that, they don't have to become registered.
And then, Sona, I think, did you have some trend reports, some marketplace trend reports that you were going to share?
So I was going to say it's easier for the end taxpayers, but it's also great for the states because they get the one-to-many ratio, right? Through a marketplace facilitator, you can control so many different small taxpayers. So that's why states love it. And as far as trends, what we see is this is the largest and fastest growing area in the retail channel globally. And that will continue through 2027 to represent a significant portion of the retail. And states are also getting smarter, right? Now you have a way to control so many different retailers through a mechanism, the marketplace. So they're having these marketplaces track more information. They're using these marketplaces to track theft. Now they need to track, large volume sales or track, validate the buyers. So there's a lot of that activity happening across different states as well. But it is the fastest growing and will continue to be.
But what happens, like Mark was mentioning, like most of the people that are selling in these places don't even know that they're responsible, right? So how do you know that you are? Is there a questionnaire that you can fill out? Is there somewhere you could go, like questions that you could ask, triggers that I would know that I'm responsible for doing this?
You, as the marketplace facilitator, it's highly complicated, and you're right. A lot of times these marketplace facilitators don't even know what their responsibility is. They're new to the industry. They don't know they need to collect taxes from all their sellers, right? So there's definitely a lot of education going on. I know at Avalara on our website we have some information for marketplace facilitators.
But what about the seller side?
It really doesn't matter to the seller, because whatever they sell, they collect the tax through the platform and it gets remitted by the platform. So for them, it's great.
Hopefully the platform's doing that.
Hopefully the platform is
If the
doing that.
platform's not doing that, that's where the trouble exists.
Exactly.
Right.
Exactly.
I think asking that question for the firm, to ask that question if someone is selling in an e-commerce marketplace, is ensuring it. Yeah, the big ones, Etsy, Walmart, those are easy, right? But there are other sellers that are popping up every day, and the question is on those sellers, are they doing what they're supposed to be doing? And if they don't, who does the responsibility fall back on? Is it that marketplace provider, or is it the individual? Someone is going to be responsible for it. And I think if you're reselling on something like that, a new platform, you have to just understand that it's going to fall on someone.
Yeah. And as
Okay, go ahead. I guess our guidance is, because even if you're on a marketplace provider and you're selling through that platform, we do require that the seller, the individual, still maintains their records for a 4-year period, so that in case the marketplace provider's audited, they can still obtain those records from the seller individually as well. And then if they aren't collecting and remitting like they should, that could create an issue. So.
Okay, we are going to take just one moment to share our first CPE code for this session. It'll appear on the bottom of your screen. That's your notice that you should make note of this code if you're planning on collecting CPE credit for this session. Okay, so what should a CPA do in terms of helping clients make sure that they're staying, keeping up with the sales tax laws?
make sure your clients are compliant, right? The industry's transforming so quickly. We talked about marketplaces. We talked about Wayfair. Wayfair's been out there for 4+ years now, but there's so much people that are still not compliant. Some just don't know any better. Others choose not to because it's too costly. But I think the profession and as tax advisors, you really need to encourage your clients to be compliant, because this is a pass-through. Right? The responsibility to the end client is really to collect and remit. But if they're not compliant, they don't collect, it becomes a direct cost to them and hits their bottom line. So it's so important to encourage companies to be compliant.
I think in a lot of instances, as we talk to our member firms about it, there's like several iterations of where firms are in sales tax, whether they're providing the service for their small business clients or they're referring it off. Some are like set it and forget it. So I'm going to send my client to Avalara. I don't have to worry about it anymore. Yet, when the sales tax audit letter comes to the client, it's not going to come to Avalara. It's going to come to the client. Who's getting the phone call?
Right.
It's going to be the firm, right? And so at that point, they have to be prepared for it. Whether or not they've ever managed a client through a sales tax audit, they have to find the right way to be able to make that happen. And there are firms who have been doing that on a regular basis, or I think even the proactive portion is for them to do kind of like a pre-audit to go into their clients, the ones that may be most suspect to it, to be able to say, sales tax readiness, what happens if, and really
Right.
walking your client
I
through
actually
it.
was gonna kind of follow up with you there, Mark, because sales tax is oftentimes a specialty division in much larger firms. Now you're like a sole practitioner, four attorneys. How do you arm them? What are some questions? Like if a client comes to them, what can they ask them, or how can they direct them to somebody that knows more, or at least answer questions so that then they can refer them, the practitioner can refer them?
For us, we have 55 member firms that range in size, a variety of sizes that are there. And I say whether you're a small firm in a local market that you can refer off to someone else in your local market, or finding someone in your state that's going to have that expertise. They are all over, people who have that. And I keep saying that you don't have to necessarily do the work, but you have to understand that the work needs to get done. And so where to go to get that. And that's kind of like to me, the advantage of having an alliance and association where you can refer things back and forth to each other. And that's where, like, I appreciate the partnership with Avalara, where they're coming in and they're doing education for all of our member firms so that they can better understand it, but then we can focus our firms in who are not doing it into the other firms who are, and then they know where the resource is. It's one of the highest, from a tax perspective, it's one of the highest growth areas for our member firms, especially in this readiness assessment. So I encourage all firms to do it, and then when you don't, there's still revenue opportunities, because when you refer it to someone else, there's still that relationship management with the client.
Right.
And so you're interacting with that on a regular basis.
I mean, revenue aside, they at least need to be able to go, uh-oh, you have a problem.
Right.
Right, so, yeah.
And I do think the Wayfair is really magnified the need for what you guys do, because now you have to collect taxes in a state that you have no physical presence, and you're using a local accountant, and you're being audited in another state. Your local accountant may not be able to represent you, but having a network like Alineo is really beneficial for them to leverage other member firms.
Yeah, but Sona, I didn't sell it in the other state. I sold it on the internet.
Yeah, there you go.
So I don't have to worry about that other state, do I?
That's right.
So now I had a follow-up question that came from the audience. It said, assuming that the marketplace platform does not pay the sales tax, will the various states come back to the seller?
I don't know. It depends on the state. Depends on the state. And this is why this is so highly complicated, is because these rules vary by state and they're fluid. They're constantly changing. So I would say the answer is it depends on the fact pattern and the state.
What's the responsibility of the CPA who's working with a client and turns out that client isn't paying sales tax, or isn't paying it appropriately, or isn't paying it in the right state, but that CPA isn't a sales tax person?
Your clients come to you as a trusted advisor, right? We take that terminology, trusted advisor, very, very close to heart. And this is, again, going back to lines, you need to have a network. If it's an area you don't know, like sales taxes or other areas, leverage your network, because you have a personal obligation to your clients to be that trusted advisor. Are there legal consequences? I think there's disclaimers to protect the CPAs around that, but there's a personal obligation that we have as CPAs and tax advisors to our clients.
We see that a lot. And I've talked about this for years to firms, that you should never lose a client because a client felt that they outgrew you if you're able to put the resources together in an appropriate way. That client relationship is so critical, and the CPA has it ultimately, and they could create their own network, as Sona said, to be able to say, okay, I don't do valuations, I get that over there, I get sales tax over here. Whatever the case may be for that client, I think that's really important to have that resource on a regular basis.
Okay, I think we should take just another quick break. We have a word from our sponsor, Avalara, and after that message, then we will give you the second CPE code for this session. So we'll be back in a minute.
From Anchorage, Alaska to Zellwood, Florida, Australia to Zambia, Your clients have customers everywhere, and they're growing. But think about all those countries, states, cities, and municipalities. Each one has its own business licenses, tax rates, rules, and regulations. It's overwhelming. And to make it even more challenging, those rates and regulations constantly change. So how will you help your clients stay on top of this complexity with the resources you have? Avalara has the answer. Purpose-built for accounting practices, Avalara for Accountants is a portfolio of solutions that helps you automate sales and use tax compliance tasks, manage multiple preparers, increase your efficiency, reduce risk, and improve accuracy as well as client satisfaction. Here's what Avalara for Accountants enables you to do. Automate the tax prep and filing process from end to end while maintaining accuracy and control. And if your people are already maxed out, you can outsource the filing work after you get the final sign-off. Be the trusted expert and advisor to your clients. We offer easy to find and understand answers to tax questions. It includes simple explanations and access to the rates, regulations, and other information buried on government websites. Help your clients reduce risk and liability by researching, acquiring, and renewing the business licenses, registrations, and permits they need to do business. You'll build client confidence by ensuring they're compliant with an ever-increasing amount of business license requirements. And as your needs change, and as all those tax rates and regulations change, Avalara for Accountants will be there with new solutions and support to help you grow your firm and serve your clients. Tax compliance may be one part of your business or a service you're looking to offer, but it's our specialty. That's why Avalara is the choice of tens of thousands of customers worldwide. No matter the size and scale of your firm or your clients, we're your partner, and we're invested in your long-term success. Try Avalara for Accountants today and see the benefits add up right before your eyes.
Welcome back. On the bottom of your screen, you should see the second CPE code for this session. Thank you. Be sure to record this if you're planning on collecting CPE credit for this session. Okay, so let's talk about your client who has now gotten a notice from the state that the company that they represent is about to be audited. You as the CPA, what do you do? Let's start with the CPA and then we'll talk about what the state means about all this.
Yep. So I think, well, it depends, right? If it's a firm that's doing it, they know full well what to do, which is great. The firm that doesn't do it, then, after they have the, oh no factor, clean it up on family TV, then it's finding that right provider. And so hopefully they've created that network. I also know, if the client is on a platform, then I think it's getting in touch with the platform, trying to get the data behind that, but then finding that sales tax audit firm that is able to help them with it. So for us, we make sure that we have a marketplace so people know where to go pretty immediately so that they can respond back to the client pretty quick. But I can't encourage enough for firms to have that all set up before the call happens, right, to know where the provider's going to be. And I think even Avalara, you have like a network of firms that you can even recommend that if they're not associated like we have, that there are people that you can put in touch with them as well.
We do have a network of partners that we can recommend.
Yep.
Okay, so Colleen, from your perspective, what's the process? What happens when you've selected a firm for audit for whatever reason, and you've sent out the first notice? What happens then?
Typically, we wait for the questionnaire to come back. It's just a contact information. It's not an audited document, so it's usually best to just fill it out the best you can. And then the auditor contacts the taxpayer to set up an agreeable time to start the audit. The auditor will walk the taxpayer through what kind of records are necessary for that time, and we're reasonable with timeframes. We understand that we might not be the only state you're under audit with. So, we will try to get in line, so to speak, and work with them on that. But then after that, it's obtaining records. I'd say the best thing to do is not ignore the notification. We do have that.
Good idea.
we do have that a bit, where we have to hunt down
Do they just think it's going to
contacts.
go away? I mean, this isn't the first time I've heard of that. Like, are they just pretend they didn't get it? Do they are they honest with you and say I ignored it?
No, I think usually I never received it. I mean, it does go to a blanket company name, so it has to find its way probably to the right contact person. So I
So
mean,
you give them the benefit of the doubt.
right, yeah. And like usually we're like, oh, hey, we're under audit. Did you get our letter? Sometimes it's just, oh yeah, I forgot to send that back. We did receive the questionnaire. I'm in the middle of filling it out. We do get calls sometimes when we send the letter out and the taxpayer will call and be like, it says 10 days on it, I think our letter says, and they ask for an extension. And yeah, we're fully open to that, and we're very, very understanding that you may not get it back in a short period of time. But that does happen. We do have to try to find people sometimes and hunt for a person. So from our perspective, it's best if we can get that contact and that communication going. It's a lot harder when we don't have a response because from our perspective, we need to do the audit. So we will start sending out nasty gram letters, I guess you can call them. I mean, we do start saying, you have 30 days and 14 days to respond, and then we start estimating an audit. And we don't prefer to get to that.
But even knowing that, like if I'm the practitioner and my client says, I got this notice, I'm freaking out, it says 10 days, it's in 2 days, I don't know what to do, we could say, did you ask for an extension? They're usually pretty open to it. Just even being able to give them that little tiny bit of advice gives them a little bit of peace of mind and go, okay, I'm not going to freak out, and then we can figure out who else can help them, right?
Right, exactly.
Putting my auditor hat on, and many years ago, and this is not a reflection of Texas, but I would say treat your auditors with respect, because being an auditor, I can tell you some horror stories. I've been put in right next to the freezer, and my desk was a box. Some people say, don't make it comfortable for your auditor so they can come in and live. End of the day, your auditors want your clients to be compliant, right? I think the best audit experience is when you're working closely and collaborating with the auditor and helping them get their work done, providing the data in a format they want so that they can do their review and leave. So my horror stories are from many years ago, but I'm still scarred.
So based on that, though, too, that's where I think that the firm can really help with that, because the firms have understood, hopefully the firm is, cordial to their auditors of the IRS and the states and the like, that they can create that relationship, understanding their CPAs, their accountants, and so they can speak common language and hopefully kind of keep the client a little bit away from that. I remember my clients back in the day that there were several that I didn't want talking to the auditor at all.
That's right.
So it was
That's
better
pretty
off
much the
for us.
rule, right?
Yeah.
Close your mouth, don't say a word, let me
That's
do all
right.
the talking.
Exactly.
That's right. And so I do think that's where it's so important. Even if you're not doing the audit and you don't do sales tax audits, but you know the client, I think it's important to be there and as the kind of client representative.
Okay, and so you go to the meeting and you, as the client, you disagree with what the state is saying, then what happens?
So we have multiple avenues. We can have meetings with the auditor's supervisor or manager. We have reconciliation conferences. We also have an independent audit review conference, so you can have a separate third party. They are an employee of the comptroller's office, but they're not within audit division. So, they have background in audit or tax policy, that kind of thing. And they'll come in and hear both sides of the disagreement, and they'll make a ruling. After that, then we have, after that, usually a decision's made, the state is held to it, like our employees are held to it. We can't contest it after that, but the taxpayer still can. So even if they don't agree with that person, what they say, they can still go and file what we call redetermination, come back. It's like a second look from the auditor. And then from there, then there's hearings. So we have that. So it can go on for quite a while, unfortunately.
And is there an expectation that if an accountant is involved representing the client, that it might be dragged out longer than?
No, not necessarily. I mean, I've experienced both. a taxpayer sometimes can drag things out. A consultant can too. It varies widely. It doesn't mean sometimes I've had an audit with a taxpayer and I've wished we've had a consultant on board because it's like, oh, you're not quite following. Sometimes they just don't have the expertise, and the consultant would know what we're looking for and records and understanding the tax laws. Sometimes that can be beneficial. There's no requirement for the state that they have to have a representative. They can be their own representative for an audit.
So I think you said that typically you're like 2 to 3 years in arrears on doing an audit, right? So say you've audited a company and determined that they were filing incorrectly or not filing or whatever. Now do you automatically go to the intervening years and isn't that like free money?
Yeah, depending on, especially how long the audit takes. I mean, sometimes that next audit will come up. And so sometimes we'll talk about it right then and we'll extend the period. We'll take the errors from that period and maybe project forward so that there's less work for both parties. Sometimes we will wait. Okay, well, this one's going to be done, but in about a year or two, we'll be back. So, yeah, it can differ.
Okay, and the accountant's job in terms of representing the client who had an adjustment made, what happens? How do they treat their client after that?
I mean, if they had done the pre-work on kind of audit readiness, then I do think that they need to start looking at other periods. And I think now the client's going to wake up to the fact that it is likely that they may see a sales tax auditor. And therefore, we need to mitigate whatever exposure we have beyond that. And then also putting the systems in place, probably if they weren't using a sales tax provider. It's kind of, I equate sales tax in today's environment much like payroll used to be 30 years ago. And when the payroll providers started up, there were still firms that were trying to do payroll. There's still firms today trying to do payroll. Sales tax is the same thing. You know what? It's complicated.
Yeah.
And to try and be successful in trying to get your client to do the right thing when there's all this technology out there, I just refer that and then focus on the other things that are important to the client and making sure that their readiness assessment that they're reporting in, because even if you're using a provider, they still have to bring in the right information for the provider to be successful. So having that conversation, making sure they're giving the right thing and annually updating that info, I think is important.
I think taking the findings from the audit and mitigating those risks for future audits is the top objective of an accountant. So you don't want the auditor to come back and assess them on same things again with P&I, penalty and interest. So that's the last thing you want as an accountant. So invest the time in fixing the issues so that you're not seeing it over and over again.
I think the funnier conversation happens with firms a lot is after the audit, then the accountant looks at the client and says, see, I told you so. You should have been doing it the right way all along. Yeah. Now we need to take a look at it, right? Yeah. And so I think that is some of what happens out there too.
Yeah, we did surveys actually, and the top 2 areas of assessment that we found in our survey of I think 400 or 500 people was rate discrepancies and product taxability discrepancies. I'm not sure if you're seeing that, but if that is true, for example, for Texas, that could be mitigated with automation and technology. To your point, we don't think twice about doing payroll. I think sales tax is becoming that because with 13,000 jurisdictions across the nation, things changing on a monthly, quarterly basis, it gets complicated.
Yeah, I definitely agree with that. The rate changes, we have rate changes pretty regularly, and the locations and the jurisdictions, there's so many. I mean, even for our audit staff, it's a lot to keep up with. So, we have software that helps us. So that's certainly needed. But product, I think service is our biggest for Texas. We audit a lot of services. So we tax a lot of service, I should say. So that's an industry that's constantly changing too. I mean, with innovation, new services that are coming on board, and we're constantly looking at them to determine, are they taxable? And then we do the audit sometimes to identify, are they, and we use our other tax policy groups and our attorneys to help us answer those questions.
So we do have some questions coming in from the audience, but first we actually wanted to launch a poll question to kind of gauge the audience about whether they've been involved in a sales tax audit with a client in the past 12 months. Yes, no, or my client was audited, but I referred them to another service firm. So we're going to go ahead and launch that poll, and while we're waiting for the answers to that, I will ask you guys some questions. I'm going to start with one for Mark, because it's a little controversial. My clients come to me for an income tax return, not sales tax. I can advise them to do it right, but why should I increase my knowledge in an area I have no interest?
Yeah, and you don't have to. That's the beauty of it, but they still have to pay sales tax, so we can't ignore the fact that they're going to have that need. And again, because I do the income tax return, when they get the notice on sales tax, if I have the relationship with the client that way, I'm getting the phone call.
Yeah.
And that's why I at least, not that I have to be super knowledgeable, but I have to know enough of where to go to get the answer when it happens, because they're not going to be able to differentiate between an income tax letter or a sales tax letter or a state remittance letter, any letter, or even payroll, any of those letters that come, they're going to get pulled in at some point.
Go ahead.
As a trusted advisor, I don't think saying no to your clients is an option. Right? If they come to you with a request, no is not an option. I can't help you is not an option. So you have three options. You either develop the knowledge internally, which may not be the case you want to do. You partner with someone within a network if you're part of a network or outside, or you refer. So you have options. You don't need to do it. Yeah, you can't say no.
You can, but they won't be a client for
Yeah,
much
that's
longer
right.
thereafter. I mean, that's the point, right?
This was specifically for Sona for Avalara. How does Avalara work for a client that already has an internal point of sale system that sets up and calculates the sales tax due or collected for all invoices? Is that too complicated to answer right now?
Well, no, I'm not sure. They already have a point of sale system that has tax in there. How does Avalara help?
Yeah.
Avalara can help with the filing because your point of sale system may be able to do the calculation, but not the filing of the tax returns. Or you may have sales through multiple data sources. So point of sale can be one, e-commerce can be other. You may have, financial systems, use taxes. So we can work with the other areas, take your calculated taxes from point of sale and file the returns.
I think even with the point of sale, and I have this from personal experience, my wife has her own shop, and she actually had a customer come in and tell her that she was remitting the wrong tax. She was over collecting and remitting to the state, so she could actually get a refund, I think. And because of that,
Wait, Mark, you mean you didn't help her with her sales tax?
well,
You didn't call me?
I told her she needed to marry a new accountant. Is what I told her, is because and sales tax is it. But that's the point. Is she's doing the sales tax remittance because she's like, oh, it's so small what we do. It's that easy to get it wrong.
Yeah.
That from the point of sale, first of all, you put it into the point of sale wrong, it's going to always be wrong. And then the remittance after that, the filing. I watch her do the filing. I'm like, this is nutty, and I should have a
Sona, you mentioned use tax. So it says, what is the situation? What's up with use tax? I had a client with employees who thought that negotiating no sales tax with the seller saved money. The state sales tax agency came in and audited that company. What should a CPA firm do to advise their clients about use tax?
I would say use taxes, and you probably would agree, are more complicated than sales taxes. Sales taxes is I'm selling tangible personal property or services in Texas based on who the buyer is, where I'm shipping to or where they're taking possession, and what I'm selling. There's a rate you apply. Use taxes are even more complicated because, I can buy computers for my facility in California. How I use that product may drive the taxability. So that's where the complexity with use taxes come in. It's the use. If I buy computers and I'm using it in my office, it's taxable. If I'm using it in R&D, it might be exempt. So, understanding those intricate differences can be really difficult to maintain. So it is just like sales taxes, it's addressed in an audit, it's due and payable, and it's complicated.
Are service charges non-discretionary tips subject to sales tax?
Not in Texas, at least. Yeah, gratuity.
Again, it depends where.
All right.
Yeah, I mean, it depends on. I mean, if, I'm talking gratuity at like a restaurant, but if it's tips onto a service, it depends on if the service is taxable. So it could be.
And also,
it's
is
a
it
hard
mandatory
question.
or optional? You know, that also can vary based on the state.
I think you see this in CPA firms that they started to put like an administrative service fee or a technology fee on top of their service, and that's, again, there's going to be no one answer to this state by state, right? But I think that's part of the question too, is if I have a service fee, is that taxed the same way as the service is taxed?
It varies widely.
Yeah.
I'm not clear on how this question is worded, but it says, how do you view retention or obtaining exemption certificates?
Exemption certificates, I would say, is also another big area of audits, especially as states are auditing industries like manufacturing. In California, we said a sale is taxable unless proven otherwise. So if you're buying something that you're using in your manufacturing process, you don't need to pay taxes on those items or most items, but it's taxable unless you have not only an exemption certificate, but a valid exemption certificate. So I would say exemption certificate management is really critical, and if you have clients that have heavy volumes around certificates, make sure they have a software for it.
I'd say in our case, where it's make sure you're reading the certificate. We will have audits where they're handing over a number of certificates, and a lot of times they're incomplete.
Yep.
They're not filled out. They say things that don't fit what they're buying. So maybe they're just using one from a different sale. So that's definitely reading the certificate. Texas is like a should have known state, so we kind of apply that to the seller that's collecting the certificate, that what they should have known, that it fits for what they're selling. So is it exempt? Is it a valid certificate? Should they have known what it's being used for?
Yep, and there's systems out there that will help with that validation process, so it's not on you as the accountant or your clients to validate that.
So Mark, from a practitioner perspective, right now I'm that person that said, I don't want to know anything about the sales tax thing. I don't need I cannot occupy any more space in my brain. What are examples of some practitioners you've seen like that they've done to get started? What are just some talking points or things that they must know?
I think in first and foremost, like I think back to my days in a firm too, and finding the right provider for kind of the day-to-day, first and foremost, right? And so making sure that your clients are set, that their point of sale is set up, and that they can do the remittance okay, and all that's being taken care of. And now I got to make sure that we're having these conversations. Again, if I don't want to do it, then I'm going to line up with somebody who does. And inside the marketplace, I mean, social media makes it so darn easy these days to find them. Or, again, the benefit of linking up with a provider who does it is they're going to have their own kind of marketplace to be able to find that. Maybe you don't want someone in your market talking to your client, but you still need sales tax help. That's where having a kind of a national grid like that becomes incredibly helpful, because then you can get somebody from another market to be able to do that. There's less risk of that firm taking your client. Now, the other firm wasn't going to take them anyway, but okay. I think that having that and making sure that they're set, you don't have to do it. Take advantage of technology and the companies that have technology. Start there, and then if you want to start getting educated on sales tax for your particular market or state, then I would start there. But then there's that broader picture of all states that you have to worry about, and that's where you may have to refer to somebody else.
Okay, we need to post our final CPE code for this session, so that at the bottom of your screen you'll see code number 3. Be sure to record this number if you're planning on collecting CPE credit for this session. So as we wind down in here, do you have any other recommendations for accountants who are representing clients who may be liable for or good candidates for sales tax audits or going through them, or any stories to share of, like you were saying, horror stories of experiences where things may have gone awry?
I say, as trusted advisors, one of the key responsibilities you have is to ensure your clients are compliant. And sometimes they don't want to be, and I know it's difficult. I've been at the other end as well. But ensuring your clients understand the risk of non-compliance and what they need to do to be compliant, I think is really important. Because if they're going to be selected for audit, they're going to be selected. The goal would be to have a no-change audit, which means they're doing things correctly and they don't owe anything further. So to me, that is the key thing I want to communicate to you as professionals.
I think that's a good goal for us is when we come in to do an audit, we're definitely trying to get that compliance set up so that we don't come back. I mean, there's a lot of taxpayers out there, so we want to get everyone in compliance. So that's our goal on the state side.
I say for the firms, just get that documented, have that conversation about, where are they on sales tax? Do they focus on it? Do we need to bring someone in? Have that, and then find the right party to be able to help them get that done.
Okay, and I have one more quick question for Colleen. What's your biggest challenge in dealing with taxpayers coming in, or tax non-payers coming in for sales tax audits?
Probably records, obtaining records, having the data available, having it electronic. We do like to deal in a lot of electronic data, so that certainly is an area that we struggle with, and taxpayers being able to find the data that we need or for the period of time that we need, because we will have 3-year or 4-year audit periods. So I'd say that's the biggest struggle, and that's probably what causes the longest delays on our audits.
All right, well, thank you all so much for so much useful information. Food for thought, I hope, for all of our audience. We really appreciate you doing this session for us. We will be back at the top of the hour with our next session on using technology to help solve staffing issues. And right now, we would just like to really thank Avalara for sponsoring this section. And we will be back soon.